The Bitcoin halving cycle has begun. You know the one. There you have it. That chart is the chart. Its banana appearance is due to that. It's as if it performs this automatically. Honestly, that's why we're all involved in the cryptocurrency market. Everyone hold on a second. Although there are innumerable crypto market newsletters to pick from, we can all agree that the market is always moving. Because to its straightforwardness and ease of use, Bitcoin Zella stands out. Anybody can. Jump into the experience we've made. Whether you're an old hand at crypto or just starting out, guess who's keeping tabs on us? The guy behind the smash hit Rich Dad, Poor Dad, Robert Kiyosaki. On top of that, it's free, and we'd like to use this time to thank everyone who has put their faith in us. If you subscribe right now, you'll get all the updates at no cost. It's better to be ahead of the curve than to merely follow. If you want to stay ahead of the curve, subscribe to Bitcoin Zella now. In today's video, Raoul explains his macro view, the banana zone, Bitcoin's potential, the impact of the elections on public opinion, on cryptocurrency and investment techniques, and much more. All right, then, let's jump right into the video. That time of year when altcoins are all the rage is known as the banana zone in the cryptocurrency markets. That's when things begin to go vertically. Eventually it does. This year, which is the US election year, due to this cycle, this everything code cycle, which is the Bitcoin halving cycle, things usually begin to speed up and become ridiculous around the summer or fall of that year. After that, the market takes on the appearance of a banana as prices skyrocket. So on the left side of a few charts that I shared on Twitter, you can make out bananas. In the prior banana zone, prices unexpectedly begin to consolidate, rise little, and then proceed to go absolutely bonkers. Now, let's talk about the bananas that are a result of the technology. Ultimately, the more people use it, the more. What are we doing here if you take this stuff away? A new layer of the internet of value has been bestowed upon us. It encompasses ownership, settlement, and all of that. That would be impossible for us to own, unlike the internet. What we do here is our responsibility. As a result, our profit margin grows in direct proportion to its usage. This is a massive democratic system of distributing a large sum of money to many individuals in an egalitarian fashion. This space is currently worth $2.5 trillion, just to give you an idea. It is projected to reach $10–15 trillion by the conclusion of current cycle. If this rate of growth continues until 2032, we will have reached $100 trillion. The opportunity is enormous, and there's $97.5 trillion up for grabs, which is why I can't stop advising people not to screw this up. All it takes is controlling the new internet to accomplish that. That concludes our discussion. There is, therefore, a banana zone characterized by completely irrational behavior. Afterwards, we achieve the remedial periods, after which the process is repeated once more. At this point, will there be no mistakes? Is it going to be the same? No. In other words, there are no assurances that this will work. However, the liquidity cycle is the foundation. The basis for this is the macro cycle. Interest rates form its basis. It's founded on numerous factors. Lots to consider. In the wake of the Bitcoin halving event, the cryptocurrency world is eagerly awaiting the coming of the golden bull run. Analysts are attempting to establish expectations for the price of BTC at this bull cycle peak, especially for the analysts who got together and decided that $200,000 to $500,000 would be the top of the Bitcoin BTC cycle. Even though the analysts explicitly state that this is not a forecast or investment advice, it is nonetheless a bullish anticipation. After confirming that it is only an expected outcome based on trends seen in past cycles, they proceed to elaborate on their thesis. Using historical Bitcoin halving events as a lens, analysts study the price activity of Bitcoin charts. For this data set, we specifically looked at Bitcoin prices at 1, 3, 6, 9, 12, and 18 months after the halving. What they would see here is that the market does some basic scene analysis in the first 3 months. When the price of Bitcoin experiences a meteoric rise somewhere between 6 and 18 months after the halving event. The data demonstrates that Bitcoin's price has returned to a high level after each cycle, beginning with the first halving and continuing through the third. These are fantastic returns for Bitcoin in a short period of time. In the first, it was 45x, then 28x, and nearly 8x. This is intriguing because a significant price increase is anticipated during the present phase of Bitcoin's halving. Support for Bitcoin ETFs is a major factor building up to that. The predicted pump this season could be exponential if we average the returns from the prior two cycles according to historical data. If Bitcoin BTC reaches that degree of appreciation, it will surpass the traditional gold markets and become the most iconic accomplishment of all time. If this happens, the cryptocurrency market might be quite fascinating. The ability to pay off debts is the primary goal of central banks and governments infusing liquidity, because that's what it does. All of this, the banana zone and the everything code cycle, happens because we are in the huge debt funding cycle this year. All of the debt must be funded by them. As a result, they add funds to the system. Cuts are made in a specific method. They pull it off via the reverse repo. Their method is known as quantitative easing. They use any means necessary to settle the debt. All of that includes the United Kingdom, China, Japan, and Europe. Thus, they all play the identical game. Therefore, they are all teeing up. They are prepared to start moving quickly as inflation falls. The markets have been experiencing a rise due to the increased liquidity. But when does it reach the point when it has to plunder a lot to fund what? There is a need to fund $10 trillion worth of items, and that concludes it. This year and the year after that, it usually happens. To what extent are your parents interested in cryptocurrency? Those folks are that old. They care about the people who vote for them, but beyond that, they couldn't care less. And here's the thing, out of 108 million Coinbase accounts, maybe 10 to 12 million are actually using the service at the moment. 20 million to 30 million is the range you'll see as you enter the banana zone. A large number of voters are so immediately involved. That is on top of the influence that the companies behind the ETFs have in politics. For these individuals, it has also become a matter of financing. This is due to the fact that their super PAC's wealthy backers will exert pressure if they make incorrect statements. Therefore, I believe the problem is far more serious than they initially thought. I also believe Liz Warren erred greatly when she claimed we are assembling an anti-crypto army without understanding that what we are actually facing is a global army of internet-native depraved meme artists. Fighting that kind of battle is no picnic. Since RFK is also clearly operating on a pro-crypto format, I believe they are beginning to see that this may be their own objective. Therefore, they will attempt to portray themselves as the side that opposes this. The question is, to whom does that matter? They will lose the swing vote if they do that.
Yeah.
This is typical of the election cycle, in my opinion, because it will suddenly take on a lot of significance for these individuals because, well, in an election that is so close, every vote counts, so they will make an extra effort to locate such little groups of voters. There is a big concentration of voters here. With whales buying and increasing their holding sentiment, the positive view is strengthened, and the price of ETA is expected to rise above $4,000 in June when prospective Ethereum ETF approvals are expected. Based on a variety of on-chain, fundamental, and technical factors, Ethereum's native token, which has already had a 67% rally this year, may continue its upward swings in June. Ethereum has been in a falling wedge pattern since June 1st and has just started the breakout stage. A bullish reversal pattern known as a falling wedge occurs when two trend lines that are descending and converging. When the price climbs to the maximum height of the wedge and breaks above the upper trend line, the pattern is considered resolved according to technical analysis. Curiously, the current breakout seems to be a bull flag pattern defined by two trend lines that are parallel and dipping downwards. Technical analysis dictates that a bull flag will dissipate after prices rise to a level equal to or greater than the height of the prior upswing. By the end of June or the beginning of July, this values Ethereum en route at $6,000.